In today's video, we're diving into a topic that has captivated crypto enthusiasts and investors alike: how political events impact Bitcoin prices. Bitcoin, as a global and decentralized asset, often reacts dramatically to political changes, sometimes experiencing significant price shifts almost overnight. Understanding why these shifts occur can provide valuable insights for anyone interested in Bitcoin or the broader cryptocurrency market. We'll look at key political factors, from regulations to geopolitical tensions, and why they affect Bitcoin's price. Stick around till the end for some essential tips on navigating Bitcoin's price fluctuations during times of political change. What role do political events play in the financial market? Political events have a significant impact on traditional financial markets, influencing everything from stock prices to national currencies. Governments are responsible for creating policies that impact how people and businesses use money, often dictating how investors react to changes in the economy. Events such as elections, economic reforms, and international conflicts have the potential to impact the stability of the global economy. With Bitcoin now considered a major financial asset, it's not surprising that political events often cause fluctuations in its price, especially as more institutional investors and financial institutions view Bitcoin as a form of digital gold. How does Bitcoin react differently from traditional currencies? Unlike traditional fiat currencies controlled by central banks, Bitcoin operates in a decentralized system. This means that no government or financial institution can control its supply or manipulate its value. Despite this decentralized nature, Bitcoin's price remains highly sensitive to external factors, with political events often causing significant changes, whether through fear-driven selling or excitement-fueled buying. The market's reaction to political events hinges on investor perception, which is heavily influenced by policies and regulations that either support or threaten Bitcoin's adoption and stability. Economic policy and regulation changes. One of the most immediate ways political events impact Bitcoin is through changes in economic policies and regulations. When a government announces policies that favor or restrict Bitcoin, the market responds almost instantly. For instance, in 2021, the U.S. Infrastructure Bill proposed stricter tax reporting requirements for cryptocurrency, which led to a temporary drop in Bitcoin's price as investors worried about heightened regulatory scrutiny. Similarly, countries with harsh regulations on cryptocurrency, such as China's ban on crypto mining, have caused significant price disruptions. When countries show support for Bitcoin or make it easier for institutions to invest, Bitcoin's price often rises as investors view these actions as positive steps toward mainstream adoption. As a result, regulatory shifts can either attract or scare off investors, leading to notable fluctuations in Bitcoin's value. Inflation and economic crises. Bitcoin is commonly referred to as digital gold because it is increasingly seen as a hedge against inflation. When inflation is high, the value of traditional currencies declines, and investors look to assets like Bitcoin that aren't as susceptible to devaluation. This becomes especially relevant during times of economic crisis or high inflation. For example, when inflation surged in countries like the U.S., and national debt levels became a concern, Bitcoin's appeal as a store of value grew, pushing up its price. In economies with severe instability, such as Venezuela, citizens often turn to Bitcoin as an alternative to national currency. This demand, driven by political and economic mismanagement, can boost Bitcoin's value as people seek a stable alternative to devalued fiat currencies. Geopolitical tensions and global conflicts. Geopolitical tensions, such as trade disputes, military conflicts, or strained diplomatic relations, create global uncertainty. Traditionally, during such times, investors turn to safe haven assets like gold. Recently, Bitcoin has begun to fill this role for some investors, who view it as a safe asset that operates independently of traditional financial systems. For instance, during the Russia-Ukraine conflict, Bitcoin's price saw heightened volatility as Russian citizens, facing sanctions, increasingly turned to Bitcoin to safeguard their wealth. Trade conflicts between countries like the U.S. And China also increased Bitcoin's appeal as people worry about potential economic instability that may affect fiat currencies. In times of uncertainty, Bitcoin's decentralized nature makes it a potentially attractive option, even though its price can experience significant swings based on the perceived stability of the global political climate. Major elections and shifts in political leadership. Elections are another political event that can impact Bitcoin prices. Political leaders often have varied stances on cryptocurrency, and their views can influence market sentiment. For instance, in the U.S., Republican leaders have generally been more crypto-friendly, while Democrats have suggested greater regulatory oversight. When a pro-crypto candidate wins or is predicted to win, Bitcoin's price often reflects positive sentiment in anticipation of fewer restrictions. In El Salvador, President Nayib Bukele's decision to make Bitcoin legal tender marked a historic moment for crypto adoption and significantly influenced Bitcoin's demand. Political shifts toward leaders with pro- or anti-crypto stances create expectations in the market, and Bitcoin's price frequently adjusts in line with these anticipated policies. Global financial policies, interest rates, and central bank actions. Central banks play a significant role in the economy, especially with policies like interest rate adjustments that influence global investment strategies. When central banks, particularly the U.S. Federal Reserve, raise interest rates, investors may shift funds away from riskier assets like Bitcoin and toward traditional savings accounts or bonds, which become more attractive with higher interest rates. In contrast, during periods of low interest rates, investors are more inclined to seek higher returns in alternative assets like Bitcoin. The Federal Reserve's decisions, in particular, are closely watched by the crypto community as they affect global liquidity and risk-taking sentiment, making Bitcoin an appealing option when traditional investments offered limited returns. The influence of international organizations and financial institutions. International organizations such as the International Monetary Fund, IMF, and the World Bank play an influential role in shaping global views on cryptocurrency. Their stance on crypto adoption, regulation, and digital currency policies can impact Bitcoin's market indirectly but significantly. For example, the IMF openly criticized El Salvador's decision to adopt Bitcoin as legal tender, stating that it could threaten financial stability. This sentiment from influential organizations creates short-term volatility in Bitcoin's price as investors gauge the impact of such statements. When these organizations either show support for or opposition to Bitcoin, their influence trickles down into market sentiment and can temporarily sway Bitcoin's price. Taxation and capital gains policies. Political changes in tax policies, especially regarding capital gains tax, directly impact Bitcoin holders. In many countries, Bitcoin is subject to high capital gains tax, and this affects investors' willingness to buy or sell. For instance, proposed tax hikes on cryptocurrency in the U.S. or Europe often lead to sell-offs as investors look to avoid higher taxation on their profits. On the other hand, countries with favorable tax policies on crypto gains, such as Portugal, see increased demand for Bitcoin as investors are incentivized to trade or hold their assets without fear of heavy taxation. Tax policies, especially in major economies, significantly affect Bitcoin's market trends by either encouraging or deterring investment. Sudden political announcements and tweets. In today's digital age, even a tweet from a prominent political figure can cause ripples in the Bitcoin market. Leaders and influential personalities, like Elon Musk or high-profile senators, have the power to influence Bitcoin prices with simple statements. When Elon Musk tweeted about Bitcoin's environmental concerns, for example, the price dropped significantly. Similarly, political figures voicing support or concern over Bitcoin regulations can cause sudden shifts in the market as investors respond to potential changes in regulatory landscapes. Such announcements showcase Bitcoin's sensitivity to public figures' opinions and the power of digital platforms in shaping crypto market trends. How to manage Bitcoin investments amid political events. Understanding the impact of political events on Bitcoin prices is essential for navigating the market. Staying informed about relevant political developments, particularly in major economies, is one of the best ways to anticipate potential price movements. Diversifying your portfolio can help manage risks during politically volatile periods. Additionally, using strategies like dollar-cost averaging allows you to invest consistently without worrying about short-term price swings, and having a clear exit plan can prevent emotional decisions during politically driven price drops. And that's it. Political events profoundly impact Bitcoin's price, and staying informed can be the key to making smart investment choices. Whether it's changes in economic policy, elections, or global tensions, understanding how these factors influence Bitcoin will help you navigate the crypto market more effectively. If you found this video helpful, please like, share, and subscribe for more insights on crypto and investment strategies. Thanks for watching, and we'll see you in the next video.